All right, so I wanted to hit on the SCMI trade because the question that everyone has is, will it get delisted or not? Right. This is was a darling stock that was returning gangbusters returns. What was it, like 87% returns last year, or 2022, 243% returns 2023, and it was basically a proxy for the AI trade in the same way that NVIDIA and Microsoft were proxies for this as well. Well, it turns out their accounting issues were a little bit fakakta, and they might fall. They might get delisted from the New York Stock Exchange, which is one interesting because they were delisted before and they came back onto the stock market. But I'm sure that doesn't make current holders feel any better. So the question I always have is, if the sky is falling, what's the trade? How can I actually profit from this? And I just wanted to point this out in case people aren't particularly familiar with options here. I'm gonna give a nice little Pollyanna view for this. So if we're in the SCMI, you'll tell me, Mike, if you think this is ridiculous, but I like these sorts of trades. And since I don't know if the stock right now is trading, what is it, at $17 or something like that, and it can fall to zero, or it can go back up to before this news came out where it was like at $48. So imagine you buy a strangle where you buy the December 6th calls at, let's say you think it might go back to 48. Let's get them at 38. And you buy the puts, the opposite puts. So it'll be around $10. This will cost you $170 per contract. And let's say it did fall to zero or went back up to like near 50, what you can get. And this is the sort of chart I like, where the idea is that it's not likely that the stock is going to stay sideways. It's likely this is you can make 3 to 5. If it goes up to whereas before you can make 3 to 5x your money. Do these types of trades tickle your fancy at all?
100%. Yeah, I think the question I would have around this is the risk reward. Obviously, the risk that you've put up here is that fixed premium for your original options contract, and you've calculated the upside on either side. And this type of spread bet makes a ton of sense to me. It's really that you have the other side of it really prepared as a hedge to just a directional options trade that's most interesting.
Obviously, the biggest market pain is that they're given some sort of extension, and they said, okay, next quarter or whatever, some period of time, you don't have to file the information that we need you to file, but it's not guaranteed. We don't know what's actually going on. So SMCI doesn't have they don't have the accounting firm that can basically set up their accounting in such a way that everything's cleared. But they might not get delisted, so it might not fall to zero. And so when you're in a situation like that, what you don't want in a strangle or a straddle is for the price to stay flat. And I almost feel like if I put on this trade, that's exactly what will happen. So for the sake of everybody who wants to put on this trade, I'm not going to do that to you. I'm just pointing it out. And by me not being inside of the trade, you can feel pretty certain that it's going to go one way or the other. That's me being a victim of the market, Mike.
Fair enough. I like the setup. I definitely like your thinking. What is unclear to me is how long the options market remains stable and liquid in the event of a delisting. Are you planning on holding these contracts to expiration, or do you plan on exiting prior to that?
Oh, I would exit. I don't like the risk of what happens when I get to zero. I'm fine with near zero. That's okay with me.
Got it.
Let me just to throw on something cute at the end over here as to why you might why someone might decide to take this trade. Let's see here. Jim Cramer says it's a sell.
It is time. It's time for the light round.
Still the case now that it's down around 8?
Absolutely, sir. It is still the case. I don't know how they can find an order. I don't know how they're going to be able to fight the delisting. Accounting irregularities equal sell the whole way until it's cleared up. And these guys have not cleared up anything.
So when I see that from Jim Cramer, I think to myself, hey, maybe long call options on an SMCI is not a bad idea, because wow, trading the opposite of Jim Cramer turns out to be pretty juicy sometimes.
It certainly does, yeah. And if he's taken that side of it, maybe there's a chance that SMCI manages to make it out of this after all.
That's right, exactly. And what a story would that? And that would be like on brand with everything that's happening right now. Okay.
Now, when SMCI got delisted back in 2018, they were delisted for what? How long were they off market for? It wasn't
I think they were
that
off for
long.
2 years.
2 years?
Oh, it wasn't 2 years long? Yeah, I think it was 2 years.
Yeah, I don't have enough context for that background, but it would be interesting to know exactly what happens after the fact. If they are delisted, what happens to your options holding, and what impact would the options clearing corporation have on your existing contracts? Because they can effectively adjust the terms of those contracts after the fact, and they might also require early settlement prior to your expiration.
Oh, really? Oh, that's not good.
So if you're looking to take it to
those are the
expiration, there's some volatility there. There's some uncertainty, in other words. I don't have a ton of experience on delisted options contracts. If anybody out there has some ideas, we'd love to hear your comments.